Welcome back to Market Movers. We're less than a minute away from the opening bell, and stock futures are mostly lower. Thomas Fross of Fross Wealth Management joins us now. Thanks so much for being with us. So what should we be looking out for here at the open? What are you keeping a close eye on today?
Well, I think obviously the most likely scenario, at least if you believe the polls, I think after 2016 we have to question the polls, but is that Democrats take the House, Republicans retain the Senate, which is not the worst case scenario for the markets. We think that that's actually very positive.
Well, it's election day. How much should investors, you think, be worried about the outcome of these midterms?
Well, like I said, if indeed there's a split Congress, I don't think there should be any worry whatsoever. If Republicans keep both chambers, which is also very possible, there shouldn't be any worry. Obviously, there could be some discontent if Democrats went if they were to win both sides, both the House and the Senate. But that being said, they would have to win a veto-proof majority in order to roll back the tax cuts and the deregulation, which clearly there's nothing showing that that would be possible, which means that the low unemployment that we're seeing, the rising wages that we're seeing, this strong economy that we're seeing should continue. And as your last guest talked about, what happens typically in the year following the midterms, since 1950, we've never seen a negative year following the midterms. As a matter of fact, historically, the market's up almost 18% in the year following the midterms. So this is not a time to be standing in front of this economy, staying in front of this train. This train is on the tracks. And we feel that regardless of what happens, once again, with either scenario, whether the Democrats win the House, which once again is possible, but we think that the Republicans are going to maintain the Senate, gridlock in Washington. Wall Street loves gridlock. So we're not worried going into this election at all. If anything, we're as bullish as we've ever been.
And Thomas, as you were speaking, we had the opening bell on Wall Street. The Dow started out negative, but has now just turned positive. It looks like stocks are going to hang around the flat line, though, because of the uncertainty right now. What would you tell investors who are looking to make moves in their portfolio based on the election outcome? Is that a smart move?
Yeah, well, like I said, I think either scenario that they should be bullish. Now is not the time to be sitting in fixed income as the Fed continues to raise rates, or at least not to be sitting with the majority of long-term money sitting in fixed income. We believe that industrials and materials could benefit if indeed there's a split, if the Democrats win the House. We think that there could be a small infrastructure bill that would be pushed through, which would be positive, once again, for industrials and materials. But that being said, we think that if it's long-term money, and you're not going to be day trading, if you're a long-term investor, you've got to stay bullish right now. There's nothing at all that indicates that now should be a time to be sitting on the back on the sidelines. Not to mention, by the way, last week was a very special week. If you remember, we hit a 5-month low last week, and then we had 3 consecutive days where the S&P was up plus 1%. Now, that's only happened 7 times since 1950. The last time it happened was the Brexit. And since 1950, whenever that's happened, the S&P's been up 22% 12 months later. So we feel like we hit the bottom. We feel like the market is telling us that finally the uncertainty's behind us. I just tweeted out a graph probably 30 minutes ago that showed how during a midterm election year, how the S&P normally behaves through October. And on average, the market's only up 0.96% through the end of October. The majority of the gains, almost 5% gains during a midterm year, occur in the month of November and December. This year is just playing out just like the script would say.
So,
I mean, look, the Chicken Littles are running around saying that the sky's going to fall to the earth, just like they were saying back when we had the presidential elections 2 years ago, and they were wrong then. And we firmly believe you got to focus on the economy. And right now they're going to be wrong again, if indeed they're being bearish going into this election.
So you're saying that you believe we've hit a bottom. You don't see us retesting the lows in the markets anytime soon?
Well, anything's possible, right? I mean, there is enough uncertainty. We've still got some geopolitical risks. That being said, our feeling is that we already hit the bottom, or we're at the bottom. And we feel like finally, with the uncertainty behind us, either scenario, the market is ready to expand. Think of a rubber band that's being pulled back, pulled back, pulled back. When you finally let it go, the rubber band shoots forward. And that's what's happened during every single midterm.